Anybody that knows me at all knows I'm very passionate about fellow property managers making the money that you guys are worth to make. I've lived the journey that you guys have lived. Just as a reminder, I owned my property management company for 15 years. Started my company in, oh gosh, I always say 15 years. Is that never even right? I started my company in 2008 and I sold my company in 2020. Huge. I guess that's right at about 15 years. And part of the reason I'm so passionate about this is because I was under monetized for the first several years of my business and had young children at home, was the sole provider for my family. And honestly, it was a struggle. I wasn't charging enough. I didn't know really what I was doing. And when I was able to turn that page and finally figured out what I was worth and how to charge money, it was just a game changer all around. I mean, for me personally, but also for everybody that worked for me. I mean, they deserve to have breathing room as well. Again, this is a topic I'm passionate about. The slide deck I'm going to walk through us with today is based on a talk that I did earlier this year at one of the NARPM conferences. So let's jump right in. We're going to be talking about unlocking hidden revenue. My goal always is that every single person here today will walk away with at least one new idea that maybe you haven't considered before, or maybe you have considered it but just never implemented it. But even for some of you on here who are doing it great and you already have like a 40% profit margin, I hope you walk away with one idea is my goal. I'll skip over all the boring niceties here and let's jump right in. Now, the maintenance coordination fee, I love talking about this one is there aren't very many fees that I get on a soapbox about that I feel like every property management company should be charging, but this is actually one of them. I actually have a strong opinion that every property management company should be charging this, even if you do in-house maintenance or however you do it. Some property managers feel, or certainly some clients feel, is isn't that included in your management fee? Like, what exactly do you do for me? And this comes up a lot too when I talk about fees. Is a lot of people are like, this is how I sell it now. I get a lot of clients because of this. And I want to tell you right out of the gate, your clients don't care actually. You problem is you tell your clients what they should care about. And so then that's what they care about. But if you sold it differently, then that's what they would care about. Right. And so just because you're used to selling something a certain way, and maybe you've even been doing it for decades, but it doesn't mean you can't change your tune and sell it a different way. So here's my take on the maintenance coordination fee here's the way I pitch it is I explain to the client, I say, Mrs. Client, Mrs. Landlord, here's the deal. I manage a lot of different types of properties. Some of the properties I manage are 100 years old. Some of the properties I manage are brand new. And as you might expect, those properties that are brand new, I might not have to do any maintenance on those properties for the next few years. And as you might expect, those properties that are 100 years old, I might have to do maintenance on those properties every other month. So in order to keep my management fee fair and reasonable for everybody, I charge a maintenance coordination fee to reflect the level of service I'm providing on your particular property. Because what I don't want to do is have my clients with brand new properties subsidizing my services for those clients that have 100-year-old properties. If you're able to practice that and pitch it like that, it makes perfect sense. Nobody's really going to argue with that. In general, they're just going to be like, makes sense. Let's do it. Now, you might hear some objections, though. Here's some of the objections you might hear. Well, your competitor down the street doesn't charge anything for maintenance coordination. And the answer to that, there's a couple of different ways you can handle that. One of my favorite ways to handle that is I'm well aware of what my competitor charges down the street. The reality, every property management company is making money on maintenance. The question is, do you want to know how or do you not? Right? So the way I do it is I'm completely transparent. You're going to see it as transparent as can be how I make money on this maintenance coordination because I have to make it to keep my management fee fair and reasonable for everybody. If there's a competitor out there that's saying they don't charge, I promise you they're making money on maintenance somewhere. You just don't know how. And so the way I charge it is I pass the unit because what a lot of property management companies will tell me, hey, I'm really proud of the fact that I don't do markups. This is not a markup. I don't like that term markup. Now, the reality, your property management software may call it something like a markup, but that's not the way you're going to sell it. This is not a markup. This is a separate fee for an activity that you're doing. So if you have the stance, which I think you should have, of, hey, I like to just pass my vendor bill on as transparently as possible. Yes, 100%. I still want you to do it that way. So you get the plumbing bill, it's $225 or whatever. You show that bill to the client if you want to. Here's the plumbing bill. Separately from that, here's my X coordination fee. I would charge it just like that. I do recommend a flat fee for that reason, because I do think it creates at least a perceived, if not a real conflict of interest, if you charge a percentage on the maintenance coordination fee, because your client is going to feel like, well, what the heck? You're going to go out and get the more expensive vendor, then you make more money. Now we know the reality is yeah, I make like $2.50 extra. Trust me, I'm not trying to massage the 250, but it at least creates that perceived conflict of interest. So for that reason, I like a flat fee. And the reality is you actually will make more money doing it as a flat fee rather than a percentage. Now, I do think you need to have a separate fee that I call a project management fee. So have a maintenance coordination fee that allows you to make money on routine maintenance, but then you should charge a percentage, in my opinion, on a project management fee. And you can decide what you want to call maintenance versus a project. I find the cleanest way to do it is just have a dollar threshold. So something like anything under $1,000 is maintenance, anything above $1,000 is a project. And it makes more sense to charge a percentage of the project management fee because you may have multiple moving parts, multiple vendors, a visit to the property or multiple visits to a property. There's lots of reasons why a percentage makes more sense. And that's why general contractors charge that way, right? So typically I see a range of between 10 and 20% on a project management fee, and that makes a lot of sense. Or you could decide a certain category of thing as a project, like, hey, roof replacement, HVAC replacement, water heater replacement, insurance claims, turnovers. Those are projects, right? But I do find the dollar threshold limit makes the most sense. All right. So now I'm going to move on to another fee that I like to talk about, and that's why your renewal fee should be much higher. Now, this is an idea that's a little more novel. I really like getting my coaching and consulting clients charging their renewal fee and their leasing fee this way. But here's the way to do it. I recommend your renewal fee match your leasing fee. Okay. So what a lot of people do is they charge a leasing fee, right? That's a percentage of the rent. Typically you'll see like 50 to 100% of the rent as a leasing fee, something like that, right? And then usually somebody will charge a flat fee for a renewal. And typically I might see anywhere between as low as $100, maybe as high as $400 or whatever, right? But I actually recommend you charge exactly the same thing for your renewal fee. And when you do this, you can actually lower your leasing fee. Okay. So let's say you're used to charging a 50% leasing fee. Well, what if you could charge a 40% leasing fee, but your renewal fee is the same? Let's think about what that does for you. Well, that's going to loosen the friction on the original sign up of the client, right? Now you look really competitive and attractive compared to that person down the street that's charging a higher leasing fee. So you have a lower startup cost for them. Now, why would your renewal fee match the leasing fee? Here's my pitch to the client. Well, Mrs. Landlord, here's the situation. I'm well aware of the fact that my competitors down the street only charge $150 on their renewal fee. But the problem is that creates a huge conflict of interest for them. Because let's think about that for a minute. The only way for you to make money in this business is if your tenants renew the lease. If you're getting turnovers year after year, you're losing money as a landlord. You're going to want to sell your property. It's not going to make any sense for you financially. So you need to be very motivated to get your tenants to renew the lease every year. And I want to be really motivated for that too. So let's think about my competitor down the street. If they're going to make $2,000 if they put a new tenant in, but they're only going to make $200 if the tenant renews, what are they more motivated to do? Well, they're going to make a lot more money if that tenant leaves and they have to put a new tenant in place. And I don't want to create that conflict of interest in our relationship. So I want us to have an aligned interest in this situation that we're both equally aligned to get your tenant to renew the lease every year. So that's a pitch that really works. And it makes a lot of sense when you can explain it to your client that way. And again, you can lower your overall upfront leasing fee and then make it even over time. And the other thing it does for you is what I find is a lot of property managers, they charge some percentage or some flat fee regardless of the term of the lease. But if you think about it, that doesn't make sense. And that's not what they do in commercial real estate, right? In commercial real estate, the leasing fee is 100% tied to the term of the lease, as it should be, right? Like if you get a tenant, and if you're not doing this, you should push for this more. If you can get your tenant to commit to a 2-year lease instead of a 1-year lease, you've created an immense amount of value for your client, a lot of security for them, right? You should be very rewarded for that. Why would you only get paid the same leasing fee if you got somebody to sign a 2-year lease versus a 1-year lease? So you need to create flexibility in your leasing fee so that it actually corresponds and correlates with the term of the lease. One of our consulting clients here at Better Who, when I was going through her fee schedule, she mentioned this one. Huh, everybody should be doing that. And so now I want to pass on the wisdom. Now, everybody here is doing some form of utility management, right? You're doing some form of having to turn utilities on and off, or you are listing either yourself or your landlord as what is it called? It's called the backup option. In case it gets disconnected, it's got to get revert to owner, right? So this one's really, really cool. So in the past, what I always said is, yeah, why don't you just charge some certain flat fee anytime you have to, or one of two ways I always used to say this. Either charge sort of a connect disconnect fee to your client anytime you had to put the utilities in your name. Makes sense, super simple, straightforward. And or charge a bill payment fee, right? Which I am a big fan of bill payment fees. Anytime you're paying a bill on behalf of your client, charge some form of a bill payment fee. Does make sense. That's how I always used to explain this in the past. But what do we know about any business? But what do we know here in property management? The magic happens with MRR, monthly recurring revenue. That's what you guys all want as much as possible. So those things I just mentioned are not MRR. They're one-time events that happen here or there. What if instead you charge all of your clients a monthly utility management fee? And what you provided for them as that service is, hey, I will put the utilities in my name when it's time to do that. I'll pay the bills when it's time to do that. And I'll list myself as revert to owner. Brilliant. And I don't know what you might charge as a monthly utility management fee. I'm guessing somewhere between $3 and $10. But imagine you have 500 clients and you start charging all of them $5, right? 5 times 500. Boom. You just made an extra 2,500 a month across your portfolio. Consistent every month, right? That's an additional 30 grand a year you just made on this one little idea. Easy to explain to your clients, right? You're providing real value, right? The real value is because you don't have to do this. Just because you manage a property, you don't have to manage the utilities. You could totally make that your client's problem. Of hey, when it goes vacant, Mr. Client, I need you to remember, call the utility companies, get the bills back to your name. I need you to be listed as revert to owner. That would be totally reasonable for you to do that. So you're providing an extra value of service by not asking your client to do that. Very reasonable to charge them a small monthly management fee that basically says, I'm going to handle it anytime it comes up. You're never going to have to think about it again. Now you're still charging them the bill, of course, when the bill comes in, still their property. You're not their business partner. So that's my pitch on number 3, cleaning move out fee. Now this is one of my favorites. Now, to be fair, I have to give a little caveat to this one. In today's current climate where it's getting harder to lease properties, this idea may be tricky right now. When things start to loosen up again, where it's a little easier to lease properties again, I love the cleaning move out fee. But I'm going to pitch this idea, and it may or may not work in your market, depending on how tricky it is to rent properties right now. Now, I'm in North Carolina. A lot of people don't know this here in North Carolina, and every state's a little different about this. Okay. Now, I think every state basically is the same on this, but I find that most property managers aren't fully aware or comprehending exactly how this works when it comes to clean a and move out of your property. Now, a lot of us, maybe all of us here, write something into our management agreement that says, hey, Mr. Tenant, you are responsible for getting a professional cleaning at your property and a professional carpet cleaning at your property. When you move out, you need to send me a receipt of such services. Raise your hand or give me some type of emoji if some of you have some version of that in your lease. Very cool. So a lot of us here. You're perfectly welcome to do that. You absolutely can do that. But what you actually very likely cannot do in most states is you can't actually deduct it from the security deposit, though, if they don't comply. And a lot of property managers make that mistake. And if you make that mistake and you get caught, number one, you may have treble damages with that tenant. But if somebody from legal aid gets a hold of it and they turn it into a smaller version of a class action, they could say, send me all your leases for the last 3 years, and boom, you have a six-figure problem on your hand, right? So if you're doing that, you probably need to stop or at least consult with your local attorney to see if you need to stop. Now, again, you can still put in your lease, but you can't necessarily deduct it from the security deposit. So here was my solution to that problem. I charged it up front. So when the tenant moved in, I had a whole spreadsheet built out that calculated based on square footage of like which rooms in the house had carpet, how many stairs there were, how many rooms there were, et cetera, et cetera, et cetera. Use a whole formula to calculate how much is it going to cost me to pay a cleaner to clean this house? How much is it going to cost me to pay a carpet cleaner to clean this house? And the reason why, for me, it's really important, by the way, like I know some people put in their lease that just tells the tenant, leave the house clean. That's not good enough for me because what's their definition of clean? Probably not the same as mine. And I don't want to have to argue with them about that. Well, I don't think you got to clean enough, right? Who wants to have that conversation? Bottom line is, no matter what level of cleaning my tenant did, I still need to send my professional cleaner. And no matter what level of cleaning my tenant did, unless there's something egregious, my cleaner's probably charging me the same amount of money. So quite frankly, I don't really care if my tenant really works that hard to clean the property, other than like you can't leave the oven all nasty or whatever, the extra things, right? So I always want to send my people. It's always going to cost me money, but I want my tenant to always pay for it. So I charge for it up front. So I have a little calculator that says, here's what my costs are. And then it adds some fluff that kind of includes the move out fee. So now, by the way, sidebar, a lot of people really, really misunderstand this. In pretty much every state I'm familiar with across the United States, anytime you're charging a tenant fee, by definition, it is an administrative fee. By definition, you're not technically supposed to make money on it. It's supposed to cover your costs to administer the service that the tenant has now required you to do. Like, it's not really meant to be a profit center, but you're having to do extra work when, in relation to the security deposits. So you can add that fluff for your administrative fee. So again, I would just charge that upfront cleaning fee. Now, I found what I like to do in this particular case is pair it with a security deposit alternative program. Because if I'm asking the tenant to come up with 100% of whatever my security deposit is going to be, and this cleaning and move out fee, which based on my costs usually worked out to be something like $700-800, depending on the size of the house, it feels like a lot of money to them up front. So if I offered them an alternative to be like, well, you don't have to come up with all the money if you want this security deposit alternative program, but you do have to come up with the cleaning move out fee. So I really like this. It worked really, really well for me. Now I have it all up front. I never have to argue about it on the back end, that type of thing. The only part that was a slight nuance to it where it did get a little weird is if you, for whatever reason, lose the property either during or right after the lease, but you've charged this upfront cleaning move out fee. My stance on that is I just communicated to the client and the tenant. I'm like, yeah, I'll still send my cleaners to go clean the property when the tenant moves out. They did pay for that, but I'm not giving anybody else the money. They pay for a service that I provide. I'll still provide the service. So that's the cleaning and move out fee. Again, could be tricky in today's leasing environment, but there will come a time, stick this feather in your cap where you can charge this. Late fees is on here. I'm going to give the quick example of why I'm so passionate that you also charge late fees, because it gives the perfect example. Maintenance coordination fee and late fee are my two soapboxes. Every single one of you should be charging and retaining 100% of the late fee. Here's why. Because a lot of people think, oh, late fees are meant to be punitive. They're not, actually, right? Late fees are meant to recover the costs associated with the activities that you now have to perform because the tenant was late that you otherwise don't have to perform on tenants who aren't late. In other words, the tenant made you do extra work. You're allowed to charge them for the work you have to do. Who's doing the work? Are you asking your landlord to do the work? I hope not. Please don't be doing that. Like, you're the professional. You should be doing the work, which is why you've earned the fee to do the work. It is an administrative fee by definition. You keep the administrative fee. I'm going to do 7 here just because the timing of this one is actually coming up. Love the dinner and a movie program. Love it. Love dinner and movie. Here's the way I did it. So at first I did it like a lot of things. At first I did it and made it opt-in. For example, did the same thing with HVAC programs. At first I made HVAC services opt-in for my clients. Eventually, after about 1 or 2 years of that, I realized, nope, this is not opt-in, it's mandatory. I'm doing it for everybody. Just sorry, if you don't like it, go use somebody else. It was just too important. So dinner and a movie, I kind of also made it mandatory. But at first, so the way it works is I email the client, especially if you've never done it before. You want to give lots of notice and lots of multiple touches to your clients and let them know this is going to happen. So I just let my clients know, hey, I'm rolling out basically an end of year thank you gift to your tenants. Okay. And I'm going to charge you 75 bucks for it. What I'm going to send them is dinner and a movie and a thank you card. And what I found is when I announced it to my clients, and I typically would send 3 emails. And typically I'm trying to get this rolled out to the tenants by late November, early December. So I'm going to start working on this to kind of get all the pieces in place. And so something to start thinking about now as we're in July, start to get ahead of this and think about the piece you need to put into place. So I'll email my clients once, twice, 3 times, letting them know it's going to happen. And what I liked about this program is there were some tenants that, of course, raised their hand and was like, no, absolutely not. You can't send that to my tenant. And I'm like, huh, all right. These are the people that just raised their hand and said they might not be a good fit for me anymore. Because I'm like, what's wrong with you? You don't want to spend $75 to send a thank you gift to your tenants? Like, this is just one element of my recipe for success to get the tenant to renew the lease. Because, by the way, in my opinion, what's my number one job as your property manager is to get your tenants to renew the lease. This is part of the formula. And all of your clients need to really understand that. You need to have a sit down with anybody that's going to fuss at you over 50 bucks. You need to tell them, you really want to save 50 bucks to risk a $5,000 turnover? We need to have a serious conversation here because we're not aligned on what's supposed to be happening. Okay. So back to dinner and movie. So anybody that raised their hand and fussed over $75, I got on the phone with them immediately. I'm like, we need to schedule a call. And basically I told them like, hey, this doesn't make sense to me. I don't understand. You're confusing me. And anybody that put their foot down and said they absolutely wouldn't pay for it, then there were a few that I had like that. They wouldn't do it, but I would very seriously consider getting rid of those clients. I know it seems trivial, but I'm like, if you're going to argue with me over that, then we have much bigger issues here. All right. Now, how does it work? I would go buy my movie tickets in bulk, which you can do online from any of the 2 major like Regal or whoever. And when you buy them in bulk, you get a little bit of a discount. So what does it cost to go to the movies these days? Like 12 bucks or something. You can buy them online for like 9 bucks, right? So you're saving a few bucks there. And then the way I like to do it is I would go to a local restaurant that was willing to sell me gift cards for 80 cents on the dollar. Now you might have to go to a few to get them to understand. And sometimes I had to explain it to them, right? And I would say like, look, I mean, first of all, we all know how gift cards work in terms of we're giving them whatever, a $20, $25 gift card. They're coming in and spending way more than that. Like, so relax on the 20% thing. And look, the reality is there's a very large chunk of my clients that are never going to use the gift card. I mean, how many of you have gift cards right now that you just have never used or lost or whatever, right? So it's like, look, you're making out like a bandit here. Relax on me wanting the 80 cents on the dollar. And I found a restaurant that did that for me, no problem. All right. So I'm spending about 20 bucks on the movie tickets. I'm spending about 20 bucks on the gift card, actually more like 16 and 18. So really I'm spending about 35 bucks my cost of the dinner and a movie. Now, the way I did it and what I really like doing, and it was unfortunate for me because I had teenage daughters that were willing to, I paid them a little money to go write all my cards. But if you or somebody in your team can do this step, I really like this. I hand wrote every card. So I got a little fake card and and it wasn't like I was writing a big long poem, right? But we're just handwriting a little, hey, thanks for being our tenant. Here's a gift from us and your landlord. Give the landlord credit, right? And I would handwrite the envelope, right? Because I want them to open it. I want it to look personalized. You could go the other way and do pre-printed envelopes if you want to. That's just what I did. So when I do it that way and I got a little postage and handling cost, and maybe my cost is 40 bucks, I'm charging my clients 75 bucks. So I'm making a spread here of 35 bucks per incident. So again, if you're managing like 500 units, that's 35 times 500. You just made $17,500 on this program, plus whatever labor time you spent writing all the cards, right? So that's a really, you're going to do with that what you want. Throw a nice party for your staff, give bonuses to everybody at the end of the year, keep it all for yourself. I don't care. That part's up to you. But great, great program. Start thinking about it now. Don't let it sneak up on you. And all of a sudden it's November and you're like, shoot, what did Matt say about the dinner and a movie again? So this was really fun. I always really like this one. So annual owner accounting fee. All right. So let's think about this one for a minute. There's something you have to do and something you don't have to do. What do you have to do? You have to send the 1099, right? So it's not like you really can charge for sending the 1099. That's your duty, job, obligation, regardless. But you don't have to send a year-end annual statement to your clients. You have every right to tell them, hey, I've sent you a monthly statement every month. You go take the monthly statements, take it to your tax preparer, figure it out for yourself. You could totally say that. So now, what I like about talking about this fee, by the way, this fee really drives home value versus effort. Because a lot of you here, what I hear 80% of the time when I talk about this fee is everybody's like, well, what do you mean? It only takes me 2 minutes to push the button and it produces the report. Like, why would I charge for that? Well, you got to stop here for just a second. Your clients do not care about how much effort something takes you. If something takes you 2 minutes or 20 hours, they do not care. It's not because they're mean. It's just that's not the way business works, right? So they don't care. So stop thinking in terms of, well, how much effort did this take me? How much time did it take me? Nobody cares. Okay. Nobody cares. What you have to factor in is how much value did you create for your client? So let's think about that. Monthly reports, they got to bring it to their tax preparer. The tax preparer has to take it all, put it into one big spreadsheet, analyze it for the whole year, produce the cash flow, P&L, balance sheet, whatever, to do the taxes. Tax preparer probably charging them at least a few $100 for that, if not $500, depending on who they're using, right? That's how much value you create for them when you send them a year-end owner statement. So for that reason, you absolutely can charge this annual owner accounting fee. Again, think about, what do I have to do versus where am I creating extra value for the client? Always be asking yourself that. And all this drives back to, by the way, what is my scope of service, right? Like not enough people stop and ask themselves that question. When I charge a management fee, what is my scope of service? And by the way, any of you that like come from a real estate sales background, it's hard to mentally shift on scope of service, because when you're used to real estate brokerage sales and you charge, some big fat brokerage commission and you're used to making 20 grand when you sell a house, what do you do for that 20 grand? Anything and everything the client asks for. And that's the mentality you bring to property management, but it doesn't work that way in property management. So you got to lose that mentality. That's not the way it works. So owner annual accounting fee, again, typically I see anywhere from 150 to 350 bucks. One great way you could value stack this is offer them a complimentary investor review session. And most of them aren't going to take you up on it, but frankly, they should. So now you can charge even more. Hey, here's the price. For this price, what you're getting is the annual statement and 30 minutes with me where we'll go over the statement, but not just go over the statement. We'll go over, is this property still doing for you what you meant for it to do? If not, is it time to do a 1031 exchange? Or are you ready to buy your next property? Like, look, anytime you get FaceTime with your clients to have that level of conversation where you're the asset manager and not the errand boy, do it. And if you can charge for your time to have the conversation, bravo, that's winning. All right. That's the annual owner accounting fee. All right. Now, here's the way I did month to month. All right. Now, first of all, there were certain times of year where just flat out the answer was no, you can't go month to month. Okay. So for me, that was, basically, if you ask me April through July, can you go month to month? The answer is no, you cannot. Just can't do it. Sorry. Oh, and the tenant may throw a fit. No, you have to let me do it. Sorry, no, I don't. I mean, you can sign a new 12-month lease or you can move out, but I'm not going month to month right now, April through July. Right? And they will get it in their heads that you have to do it or you're obliged to do it. You don't, right? So I just told them, no, I don't do it that time of year. And the reasons are obvious why, right? Like that's prime leasing season. You're not doing your fiduciary duty to your client if you let a tenant go month to month those months, in my opinion. You failed your client. All right. Now, for the rest of the year, I love doing my clients want to go month to month. Okay. So the way I did it is I would charge an X percentage increase in rent, and I would charge a month to month admin fee. Okay. Now, remember, get this stuck in your head. Rent belongs to your client, fees belong to you. And that's why I charge both things. My client deserves to get extra rent. They do because they're taking on higher risk by letting the tenant go month to month. They're giving up on all that security, right? So, and I made it quite expensive, that percentage. Um, then I charged a month to month admin fee that I made a flat fee because that's more true to that administrative fee nature of what's going on. Because for me, if a tenant's month to month, they're creating work for me every single month that they're month to month because I'm looking at that property every month and I'm typically reaching out to them every month going, what's the latest? Like, what's the scoop here? Right. So they're creating a lot of extra work for me. That fee was very expensive. I'll let you know. Both the increase in rent and my fee, very, very expensive. So, and tenants did it. Why? Because generally, if a tenant needs to go month to month, it's for a reason where they're out of options. Like they bought a house but they can't move in yet. They're building a house but the construction's not done yet. They have got a job that's out of town and they have to move, but they can't move yet. Right. Like one of those reasons where it's like, I have to live somewhere. Great. You can live here. This is how much it costs. And they may pitch a fit over it, but that's just the deal. They don't, I mean, again, take it or leave it. You don't have to do it if you don't want to. I'm more than happy to go rent it to somebody else, but this is what it costs to go month to month. Now, again, it's not like this is a game changer in how much money you're going to make because, you're only going to have so many tenants going month to month at any given time, but it adds up, over the course of the year, it adds up. So big fan of this one. You're worth it. Your clients are worth it. And your tenants aren't owed anything in this regard. All right. Somebody asked for property visits. Yeah, this one, again, pretty straightforward, but I find a lot of property managers aren't charging for property visits or they're charging some really stupid low amount where they're basically just trying to cover the hourly cost of their employee to go there or something, right? And again, you're thinking about this all wrong, right? You're creating value. Again, nobody cares how much it costs you or how much time it takes you. Nobody cares. But how much value did you create for your client when you go do that property visit? So now it's fine if you want to work it into your management where you're, hey, look, I'm going to include a once a year property visit and not charge for it. That's fine. If that's baked in and that's part of your service, again, just think through your scope of service, right? But really anything more than that, I definitely, and even that you could charge for it. Anything more than that, you should charge for it. And how much do you charge for it? Well, look at the service providers out there that are charging for that as a third party. Why aren't you worth at least as much as that? Right? Because at some point you may want to do that. You may want to hire that third party. Well, what if you're charging way less than that? Then you've hamstrung yourself. You can't then give yourself that option, that flexibility, right? So, so that's my thought on property visits. Now, I do think create as much value as you can when you're doing the property visits. Part of what I mean by property visits is not just those assessments that you may decide that you do in terms of whatever your assessment schedule is. Part of what I mean also is just anytime you're running to the property to check on X. And here's one of my rules of thumb on how to manage that. Whatever you're currently doing to manage your work orders, whether you're doing that in your property management software or you're using a third party software to do it, I make sure that I have a custom field or a tag on every visit that says who's paying for this visit. And there's only three possible answers: the owner, the tenant, or the property management company. And I let my staff know Property management company does not like paying for visits. Nope, we do not. Right now, when you tag it that way, it can be very eye opening for you because now you're going to look at it. You should look at this every month and say, okay, how many visits did we do this month that we know we can bill to the client? Great. We got paid back on those and maybe even made money on them. How many visits did we do this month that we can charge to the tenant? Great. We got paid back on those. Maybe we made some money on them. How many visits did we do this month that we didn't get to charge anybody? Whoa. That's $2,000 of lost revenue opportunity right there. I add all those visits. And if you're not tracking it that way right now, I promise you, because it's so easy to do. You're sitting for your office, you get some little call, and you're, oh, hey, can somebody please send Bobby over to property such and such? It's so easy to do. Oh, yeah, I just heard we got to just go check on this one little thing real quick. He's going to be in the area anyway. You'll get so much loss on your utilization. If you have a handyman or if it's your property manager, you are sucking yourself dry when you do that. So you got to expose yourself to the data and see how many times a month am I actually doing that? And then what you'll find is then when you look at it, you need to look at everyone and really scrutinize it and say, well, could I have charged the owner for that? Yeah, probably could have. I should have. Maybe it's not too late. Could I have charged the tenant for that? Yeah, maybe. So expose yourself to that data and charge those property visits. Now, I don't know about you guys in your markets, but I pretty much can't get anybody to pull into my driveway for anything for less than probably $95 at least, just to pull in the driveway. That's before they even ring the doorbell. So just think about that. Like if I had to call somebody to my house right now, how much is that going to cost me? You're worth at least as much as that. All right. So that's property visits. All right, let's talk about pet fees and then we'll see if that's our last one or what time we have left. All right, pet fees. Now, again, rent belongs to clients, fees belong to the property management company. So get clear on your language, right? If you want to charge pet rent, you can if you want to. That belongs to your client. If you want to charge a pet fee, you can if you want to. That belongs to you. If you want to charge both, again, you can if you want to. Now, my take on this is probably not the most orthodox take that you'll find in the industry. It is very common in the industry now that you'll hear other people, other consultants, coaches, some of your competitors say, yeah, I charge a pet fee and here's the guarantee that I offer with it. I didn't offer any guarantees of my pet fees, and I actually don't think you should either. I get a little more nervous than some other people on the whole is it insurance, is it not? I mean, there's stuff out there. Some of those states are getting really keen to this stuff that you got to be thoughtful and careful around it. So walks like a duck, talks like a duck. Maybe it's a duck. So if you're charging pet fees, you're offering a guarantee to go with it. You got to start to consider, is that a risk you're willing to take with your state insurance commission? I didn't offer any guarantees and I just don't think I have to because that's not what the pet fee is for. Again, what is the pet fee for? It's meant to cover my administrative costs associated with managing a property with a pet in it versus managing a property that doesn't have a pet in it. Do I have to do extra work when there's a pet there? Yes, I do. Therefore, I'm worth charging something for that extra work that the tenant created for me. So my take is charge both an upfront pet fee for basically the processing and onboarding of the pet and charge a monthly pet fee. Okay. What are those two separate things charged for? Again, the upfront pet fee is meant to charge for your processing and onboarding of the pet. I need to collect a bunch of information from you. Maybe you use pet screening, maybe use our pet policy, maybe you do it yourself. Either way, your fiduciary to your client is you should get fully educated on what the deal is. What type of pet owner is this landlord? And what type of pets in this property? What do I need to know about that? You should charge a fee for that. Why do I charge a monthly pet fee? Well, every time I go visit a property, I'm taking on risk and extra work. I got to make sure that pet's secured before I'm willing to let somebody enter the property. If you're not doing that, you should be. And that's work you're created, so you're worth charging a pet fee for that. So I am a big fan of charging pet fees in those two ways. I'm not a fan of charging pet rent. Now, some people will say, yeah, but because a pet is there, the landlord is taking a risk that more damage might be done to the property. Maybe, maybe not. I mean, I don't know how many of you guys have kids. I promise you, my children do literally 100 times more damage to my property than my pets do. Right? That was supposed to get more of a laugh and a reaction from you guys. Haha, yeah, kids are so awful. Come on. So, but look, the reality is okay. If damage is done to a property, who is responsible for it? Tenant, 100% of the time. Does it matter how or why the damage occurred? Does it matter if they did it, their children did it, their neighbor did it, their guest did it, their mom did it, the pet did it? No, it doesn't matter. The name on the lease is responsible for the damage to the property, regardless of why it happened every single time. Period. So why do I need to offer any kind of guarantee on that? I don't. I don't. So that's my take on pet fees. And I will say, of all of the fees that I've mentioned here, if you're not currently charging pet fees, this is the one you pull this lever today, it will make a significant impact on your bottom line right away. I mean, let's do some quick math. Again, let's say you're managing 500 units. Now, what's the national average is something like 70% of tenants have pets. But let's say the average on that is 1.5 pets per incident, right? So let's just say 500 times 70% times 1.5 pets. And I'm just going to pick what I think is a reasonable pet fee on that. Boom. I just made an extra $18,000 to $20,000 a month in pet fees. Just like that. That's not even including the pet onboarding fee that I'm going to charge when I onboard the pet. That's just the monthly pet fee. So that and the maintenance coordination fee, when I take on a new coaching client or consulting client, those two things right out of the gate, I'm like, okay, we got to add those as long as you're comfortable. Maintenance coordination fee, pet fees, got to add those. And if you haven't added those, it's like, boom, I just added like at least 50 to $100 a month in your revenue per unit, right? Like it's big. It's big. Yeah. Again, check your local state laws. Sam's pointing out some states now you can't charge move-in fees. Some of those things get really nuanced in different states, and sometimes there's kind of false information. So just make sure you really do your research on your particular state. Thankfully, I don't live in Connecticut. God bless, Sam. I hope it works out for you. You guys also, Sam, are really squirrely on your security deposit stuff. They have to like send money every year or whatever to their tenants based on if they were collecting interest on their security deposit, even if they weren't collecting interest on it. I'm like, the heck, bro? Don't go to Connecticut. I know. Listen, some of you here are already in coaching and consulting with us one-on-one. Some of you guys here are just paying members of the Who crew. Anybody here, if you want to just do, regardless of what your deal is with us, if you want to schedule just a one-on-one strategy call with me, if you heard an idea or you think there's some other idea we didn't talk about and you want to talk about it, so scan the QR code if you want. This is just total free offer because I'm super passionate about all you guys making extra money. No strings attached. Let's just get on a call, talk about how you can make more money. So feel free to scan the QR code or just shoot me an email, matthew@betterview.com. Or if you just want to drop in the chat and be like, hey, I need Matt to reach out to me, I'll make sure to shoot you an email. If you're not engaged in our online community, there is a page on our website now. If you just go to coaching and go to the Who crew, go to that page on our website. It makes it very, very easy and self-explanatory. Click on the button to engage in the online community. And that's where we can continue this discussion offline in a private way, not on Facebook, not where everybody else can see and scrutinize whatever. So we can hop on there, continue the conversation about all this fee stuff. We're not limited to just this 1 hour call here. So do that right now. If you haven't already, just go to betterwho.com, go to the coaching page, find the Who crew, find the link to get to the online community. If you get stuck on any of that, just shoot us an email. Any of us here at Better Who can help you with that. All right. I left us like 4 or 5 minutes. All right. I've been super excited about this for the last few weeks. I hope you guys picked up on my energy. I hope you take me up on my offer to have a one-on-one strategy session with you. So keep the conversation going in the online community and go out and make more money, guys, because you're worth it.